December 10th, 2008. A quiet room in Manhattan. Bernie Madoff sits across from two men, his sons, hands folded like he's about to discuss taxes, not theft. His voice is steady, almost polite, as if nothing is wrong at all. And then, without hesitation, he says, "It's all one big lie, no shaking voice, no panic," like he'd rehearsed it. And in that moment, $65 billion doesn't explode. It evaporates on paper. Not in a robbery, but in a sentence. Because the terrifying part isn't just the size of the lie. It's that for years, it looked like the safest thing in the room. This wasn't a street scam. This happened inside Wall Street. In plain sight. So here's the question. How does a lie that big survive for decades? And what if the same blind spot is still here today? This is the story of the biggest financial illusion in modern history. A scam so clean, it looked like safety. So boring, it felt trustworthy. And so respectable, that questioning it would have been considered rude. Picture that. A fraud you're not allowed to call fraud. Because it wears a suit. Madoff didn't just sell returns. He didn't even sell status. He sold certainty, the one thing everyone wants when the world feels unstable. And that certainty ran on three machines. A trust machine, a paper machine, and a cash flow machine. And once you see them, you'll never look at safe returns the same way again. By the end, you won't just know what happened, you'll know why smart people fell for it, why regulators missed it, and the three warning signs that expose scams like this before they feel safe. Because the scariest part is, the reason this worked back then is still working today. Before Bernie Madoff became a villain, he was something far more dangerous. A respectable guy with a clean haircut and a perfectly believable smile. The early 1960 seconds. He launches a brokerage firm with $5,000. Picture it, young Bernie, fresh-faced and ambitious, making cold calls and placing trades. And it works. Over the next few decades, Madoff becomes a pioneer in electronic trading, the kind of boring innovation that quietly reshaped Wall Street. Not flashy, not loud, but powerful enough that the industry starts treating him like royalty. Then comes the crown. Chairman of NASDAQ, the NASDAQ Stock Exchange. Not once, not twice, but 3 times. Let that sink in. You don't get that kind of credibility if people think you're running a Ponzi scheme out of your mom's basement. You get it because the system trusts you. And once the system trusts you, people stop checking. And here's where it gets interesting. Because while everyone watched the trusted man upstairs, another version of Bernie was quietly writing a different script downstairs. Madoff didn't run one business, he ran 2, in the same building, on 2 different floors, and that's what made the whole thing work. Upstairs, you had real trades, compliance binders, phones ringing, people complaining about coffee, the kind of boring finance that makes you yawn and trust it. Downstairs, you had a locked-off corner where numbers were written, not earned, and fake statements were treated like props on a movie set. And here's the magic trick. The legitimate business upstairs wasn't just profitable, it was the perfect alibi. Because on Wall Street, credibility is currency, and Bernie had a printing press, but he didn't advertise his fund, and he didn't pitch you like a salesman. He made you feel lucky just to be allowed to ask, and the invitation almost never came from an addy. It came from someone you trusted, leaning in like they were sharing classified information. Don't talk about it, don't ask questions, and whatever you do, don't ruin it. It was basically Financial Fight Club, and yes, the rules were the same. Rule number 1, you don't talk about Madoff. Rule number 2, seriously, you don't. Because being a Madoff investor wasn't just an investment. It was a flex, a membership badge that said, I'm important, I'm connected, and I don't ask too many questions. Totally normal, definitely not fraud. And once you build that kind of trust, you don't even need proof you're making money. You just need people to believe you are. Somewhere in the late 90 seconds, early 2000s, that whisper finally reaches someone like Tom. Let's call him Tom, one of thousands. Not a hedge fund guy, not a celebrity, but the finance manager at a charity that funds scholarships, hospitals, and programs for kids who don't get second chances. Tom isn't chasing yachts. He's chasing stability. Because when you manage other people's donations, you don't get to take risks. You get to be boring and right. And that's exactly why Madoff feels perfect. Tom opens the statements and sees the numbers. 10, 11, 12% a year. Not sometimes. Not when the market's up every year. Smooth, steady, almost polite. .com crash. September 11th, market chaos. His returns didn't blink. While everyone else rode a roller coaster, his chart looked like an elevator. Straight up, no shaking. Suspicious? Sure. But also addictive. Because here's what makes it dangerous. It doesn't look like greed. It looks like responsibility. So at the next board meeting, Tom slides the paper across the table and says, "We're safe." Someone smiles. Someone nods. Someone whispers, "Finally." And in a world full of uncertainty, nothing is more addictive than a number that never flinches. Totally normal. Definitely not fraud. So, how do you fake returns that perfect without getting caught? You don't start with a big lie. You start with something even more convincing. Paperwork. Every month, Tom gets a statement in the mail. Neat, boring, professional, dated, and itemized down to the day. A list of trades that look completely normal. Buy here, sell there. Dividends arriving right on time, like the universe is on schedule. Nothing flashy, nothing suspicious, just the financial equivalent of beige paint. And if you're thinking, okay, that sounds normal. That's the point. Because when people imagine fraud, they imagine chaos, smoke, mirrors, offshore accounts, a guy sprinting through an airport. Madoff's fraud didn't sprint. It filed. The trades were always too perfect. Buying near the lows. Selling near the highs. Like a portfolio with psychic powers, but presented so calmly that it didn't feel like magic. It felt like competence. And that's what investors are trained to trust. The boring stuff, the routine, the paperwork that looks like it came from a very expensive printer. So Tom doesn't ask questions, because everything in front of him is designed to answer them. And the paper machine only has one job. Make a lie. Look like a spreadsheet. And here's the part that sounds made up. But isn't. Those flawless statements? They weren't generated by some secret Wall Street algorithm or a quantum trading AI. They came from an ancient IBM AS/400, a machine so old it feels like it should be running a library checkout system, not a multi-billion-dollar investment empire. Yeah, that's what moved billions. Picture it. A beige humming box in the back room, quietly printing out trades like it's 1994 and nobody has ever heard of the internet. Because for Madoff, the AS/400 was perfect. It didn't need to be smart. It just needed to be consistent. Every month, it produced the same thing. A believable list of trades with believable dates in believable quantities, all designed to look like the most boring portfolio on earth. And boring is the ultimate disguise, because nobody suspects the guy in khakis. They suspect the guy in a cape. So this dino computer becomes the heart of the paper machine, the illusion generator that turns a lie into something you can staple to a quarterly report. But even the best illusion needs fuel, and that fuel came from other people. Now, here's the thing. Madoff didn't personally convince thousands of people to hand him their money. Other people did it for him. They were called feeder funds, intermediaries who raised money from institutions, celebrities, and everyday investors, then funneled it straight into Bernie's black hole. Think of them like hype men in a rap battle. They weren't the main act. They were the ones yelling. He's a genius, consistent, exclusive, and somehow always special. And the best part? They made it even harder to question him. Because now, you weren't just trusting Bernie. You were trusting your bank, your advisor, your country club friend who knows a guy, and money poured in, not millions, billions. Because feeder funds earned fees for sending money into Madoff, which meant they had one job: keep the pipeline flowing. Some genuinely believed in him. Others just believed in the paycheck. And once the money went in, nobody could see what happened next. So, at this point, you might be wondering, if all of this was happening in plain sight, why didn't anyone stop him? At this point, you might be thinking, okay, surely somebody noticed they did. One man, Harry Markopoulos, a finance investigator with the personality of a spreadsheet and the patience of a bomb technician. He looks at Madoff's returns and goes, nope, that's not skill. That's not strategy. That's a math crime. So he does what you're supposed to do in a functional system. Starting in 1999, he submits detailed warnings to the SEC again and again, with evidence, with reports, with the kind of paperwork regulators claim they love. And the SEC responds the way bureaucracy always responds to a 5-alarm fire. Interesting. We'll look into it. We'll circle back. And then, they don't. Or they do. But in the same way you check your smoke detector, you press the button, hear a beep, and call it a day. They ask Madoff for records. Madoff hands them records. They go, wow, what a responsible man. And they basically give him a gold star and send him on his way. Because this wasn't just a failure of regulation. It was a failure of imagination. Nobody could believe someone so respected, so connected, so boring, could be running the biggest scam in history. And when you can't imagine a crime, you don't look for it. Then comes 2008. The global economy isn't just shaking, it's collapsing like a poorly built movie set. The housing bubble bursts, credit freezes, Lehman Brothers goes under, and stocks don't fall. They drop through the floor. It's chaos. And in chaos, investors do the one thing a Ponzi scheme can't survive. They ask for their money back. At first, it's a few phone calls. Then it's a wave. Then it's a stampede. Funds, banks, charities, everyone wants liquidity. And they want it now. Madoff's investors request roughly $7 billion in redemptions. $7 billion. Not a typo. This is the moment every Ponzi scheme dreads, because he's facing $7 billion in withdrawals, with only a few $100 million in cash. The cash flow machine only works when new money keeps coming in, and in a crisis, new money dries up overnight. Behind the curtain, there's no wizard, no secret strategy, just a man with empty pockets and a printer full of lies. By December, the math can't hide anymore, and that's when Bernie Madoff calls his sons into a quiet room. It's late. A quiet room in Manhattan, the kind of silence you only hear when everyone's gone home, and only the truth is still awake. Bernie Madoff sits with his two sons, Mark and Andrew, both executives in his firm, both expecting a meeting about damage control. Bernie doesn't pace. He doesn't yell. He doesn't cry. He just looks at them and says it like he's reading the weather. It's all one big lie, a pause. Mark blinks like he didn't hear him right. Andrew's jaw tightens, waiting for the punchline that never comes. And Bernie continues. Calm, clinical, almost polite. There's no innocent explanation, no dramatic confession, no speech, no redemption arc, just accounting. And to their credit, the sons don't hesitate. They walk out, they lawyer up, and that night, they make the call. The next morning, the FBI shows up. Madoff opens the door like a man who already knows the ending. No resistance. No excuses. And in less than 24 hours, a 30-year illusion collapses. Once Madoff is arrested, the story doesn't spread. It detonates. Every network, every newspaper, every headline. Wall Street royalty becomes public enemy number one overnight, and his name turns toxic in real time. And then the victims start emerging, not in ones or twos, but in waves, thousands of them. From Wall Street to small-town retirees, celebrities, hedge funds, banks, retirees, and charities. A lot of charities. Because when the money disappears, it isn't just numbers, It's scholarships that don't get funded, hospital programs that shut down, meals that don't get served, kids who were promised help and now get silence instead. Remember Tom? He's staring at the same statements he once called safe, and now they read like a sick joke. He doesn't even know what to tell the board. And the rage hits right after the shock, because the scam didn't just steal money, it stole time. Years of donations. Years of planning. Years of trust built carefully and burned in a single day. Some victims lose millions. Others lose their entire life savings. And the worst part is what people keep saying afterward. We thought he was one of the good ones. That's the real damage. Not just financial, existential. By June 2009, the story reaches its final act, court. Bernie Madoff pleads guilty to 11 federal felonies, not with tears, not with a speech, but with the calm of a man reading a grocery list. No denial, no excuses, just the paperwork catching up. And then the sentence drops. 150 years in prison. That's not a sentence. That's an era, which is basically the justice system's way of saying, you broke capitalism. Please rot accordingly. But the court wasn't the only thing on trial, because the SEC, the agency whose entire job is to stop this exact thing, gets absolutely torched. Congress holds hearings. Cameras roll. Politicians ask the kind of questions you ask after the plane has already crashed. How did we miss this? Who signed off? What exactly do you people do all day? Turns out, we'll look into it is not a strategy. The headlines shift from one evil man to one broken system. Budgets expand, enforcement tightens, whistleblower programs strengthen, a frantic attempt to patch a hole that should have never existed. But here's the uncomfortable truth. If you think the system will always protect you, you haven't been paying attention. So, what do you do with a story like this? Because if you walk away thinking, wow, that was crazy, and that's it, then the next version of this wins. Maybe not in a Manhattan penthouse, maybe not with an old IBM computer, but with the same 3 machines. So here's the simplest checklist I can give you. 3 red flags and 3 moves you can make before you become someone's case study. First red flag. The returns are too smooth. If the market is a roller coaster and their chart looks like an escalator, that's not genius. That's a red flag with good manners. Because in real markets, volatility is normal. Perfection is not. So pull up their track record and ask one uncomfortable question. Do they ever have a down month or a bad year? If the answer is never, you're not looking at safety, you're looking at fiction. Second red flag. The same person invests your money, holds your money, and reports your money. That's not efficiency. That's control. So ask one sentence and don't let them dance around it. Who is the independent custodian? If they dodge it, if it's vague, if it turns into trust us, walk. Third red flag, secrecy and exclusivity. If the pitch sounds like a VIP club, you feel special, and you're told not to talk about it, congratulations. You're not an investor, you're a target. So demand verification, a real audit, a real third party, and a clear answer to simple questions. Because if it's too exclusive for scrutiny, it's too exclusive for your money. And when you hear smooth returns, no independent custodian, and secrecy dressed up as status, that's the trifecta. That's the same trap Madoff used, and he proved something terrifying. The most dangerous scams don't look like scams. They look like tradition. Authority. The safe option. And today? Today, it's not always a man in a suit. Sometimes it's the new Madoff starter pack. A verified badge, a private Discord, and a screenshot that says up 9% this month. Again, different costumes, same machines, and if they tell you not to ask questions, that's not a strategy, that's a spell. So the question isn't, could another Madoff happen? The question is, how many are already happening right now, under a different name? And that should be the end of the story. A man lies. A system fails. A fortune disappears. The villain gets caught. Credits roll. Except, America doesn't do endings. America does seasons. Because once the smoke cleared, Bernie Madoff stopped being a person and became a brand, a cautionary tale. People reference like it's a Netflix category, based on a true financial disaster. And of course, Hollywood showed up. Because in this country, nothing is officially real until Robert De Niro plays it. Books, HBO, Netflix. Everybody ran the same play. Take tragedy, add a soundtrack, sell it back to us as content, and it worked. People binge-watched the collapse the way they binge-watch true crime, popcorn in one hand, retirement account in the other. Like, wow, that's crazy. And then they scroll. But the people who lost everything didn't scroll. They lived inside the aftermath. The quiet years when the statements are worthless and the future you were saving for turns out to be a PDF. Bernie Madoff died in federal prison in April 2021 at 82, quietly. No apology tour, no dramatic final speech, just a period at the end of a very long sentence. And here's the twist. The story didn't end with him. Because the next big scam won't show up wearing a ski mask. It'll show up wearing a suit, or a hoodie, or a verified badge. And it'll sound like certainty. Skepticism isn't cynicism. It's self-defense. So the next time someone offers you guaranteed returns, zero risk, and just a tiny bit of secrecy, don't feel lucky. Feel warned. And if you want the next story, the next con that looks safe until the moment it isn't, subscribe. Not for the drama, for the warning, because the scariest scams don't steal your money first. They steal your doubt.